Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Wednesday, April 22nd. Firstly to the Euro US dollar, and here we see some very indecisive trading with the market caught between both the Kijun-sen and the Tenkan-sen indicator, so in no man's land, and perhaps transitioning into a new uptrending bias in the medium-term time frame. But the problem is the very strong resistance at that Kijun-sen indicator at the moment. The Tenkan-sen is also holding as support. The Tenkan-sen trades at 106.84. The inability of the market to trade in a either a strong bullish or bearish manner does suggest that there is a lot of indecision in this market, and with these last two candles being very small body candles, it suggests also reinforces that indecision. For the large black body day prior to the last couple of days trading, it did suggest that there was potential for the sellers to come back into the market, but for that trading day as well we saw the Tenkan-sen hold as support. So that is going to be a very important area for the Euro US dollar moving forward. 106.84 is where the Tenkan-sen trades at the moment. Now, important however is the very strong bearish bias in the long-term time frame in this market, with the market trading down below the Ichimoku cloud, and it does suggest that if the sellers are strong enough, the next move certainly could be to the downside, and we could see the market trading down to the 104.14 area or very close to it if we do see sellers come in and if they can breach that Tenkan-sen support. Now, with the Kijun-sen holding as resistance and very close by, we have the resistance at the Ichimoku cloud trading roughly at 108.48. It certainly doesn't look as though the buyers are going to test through that level and turn this into a long-term bullish market. Now, just looking at the bands with the Euro US dollar, and here we see the bands squeezing together, so it means that we're getting ready for a trending move. As a trader, this is a setup, a nice setup, and we know that markets move between low volatility situations to high volatility situations. Those low volatility situations here is when we see the bands squeezed together, because the bands are based on volatility, so small volatility, and then what we wait for is a breakout, and we don't know what direction that breakout will be, but the one standard deviation bands gives us a clue, and when we see either a bullish or a bearish breakout and then the strong follow through, it does confirm the bias in that direction. So what we're looking at here at the moment on the right hand side is the market trading within the bands. We've been trading within the bands for the past week or so, with the middle of the bands holding as resistance. And importantly, the edges of the bands can hold as either support or resistance, and yesterday's trading we saw the bottom of the bands holding as support. So today we're looking at potential resistance once again at the middle of the bands at 107.61, and potential support at the lower band at 106.59 if the sellers do come into the market, but certainly no strong indication of any trending action here at the moment. We're congesting here within the bands. We're looking for a breakout in either direction. Moving next to the Aussie dollar, US dollar, and here we've seen a change of trend today on this white body candle that's formed. Previously we saw a small black body candle forming after the strong selling from the day prior to that. The small body candle suggested there was quite some indecision in the market, and it set the market up for the change of trend, but we have seen the buyers test to the 78-cent level and be strongly rejected from there, with them losing commitment around that level. And the important thing here is that on this change of trend we've seen the sellers fail to take control. Now obviously if the buyers do come into the market again, 78 cents is going to be very important. Importantly however, as the market opened trading and sell off only in a slight manner, we saw the Tenkan-sen here with the Aussie dollar holding as support, and that's for 3 consecutive trading days we've seen the Tenkan-sen hold as support, and it trades at 76.96 at the moment and will be an important level. If we do see that area breached and then the area at 76.72 breached, we could see the Aussie dollar trading down to the swing lows here, roughly around the 75.50 area. Importantly, we have the Aussie dollar trading within the Ichimoku cloud, so we have a neutral market in big picture terms, so certainly not a market that looks worth trading at the moment, but looking for a breakout in either direction and then strong follow through would give us some good indication of where the market may be heading in the future, but at the moment quite neutral in all 3 time frames. Now just looking at the bands here with the Aussie dollar, and once again the bands squeezing together, so we're on the lookout for a breakout. But we have seen the market testing above and below the bands on quite a few occasions now, but we haven't seen the follow through. So here, for example, we saw the strong bullish breakout. It certainly did look as though there was potential for the trend to develop to the upside, but we saw development of an indecisive doji candle. So we want to see follow through after that. Here we saw a breakout to the downside and then small body candles, the market then trading within the bands and testing around the perimeters of the bands with no follow through suggests that we have a market that's attempting to find direction, but certainly no power behind those attempts with those breakouts. For today's trading, the market broke out above the upper band, failed to close above there with the buyers losing commitment, and certainly doesn't suggest that we're going to see strong development of the trend to the upside at the moment. The middle of the bands held as strong support for today's trading, or for the previous day's trading, sorry. And as we move forward, the middle of the bands is at 76.74, coinciding with the previous support level very closely, 76.72. So that's an area we should be watching closely. At the moment, with this new candle that's trading, it's only fairly new, but we are seeing some support coming in at the upper band, which can happen, and that trades at 77.39. So if we do see strong buying coming in and a strong bullish close, then we'd like to see strong bullish follow through, and certainly the market testing through this swing high at 78.42. Moving next to the US dollar Japanese yen, and we see a continuation of the trend to the upside today with this white body candle. It certainly does suggest that there is potential for a change of trend, and that's based on the narrowing of the size of the body. Previously we saw a fairly strong body here for yesterday's trading, the buyers in control. The buyers have closed with control once again. They've extended the high past the previous high, but the narrowing of the body suggests that the sellers have made less net momentum than they did for the previous day, and it does suggest potential for a change of trend. Now this is something of a hanging man type pattern, and with these patterns we require confirmation, and that would mean a candle with a lower high and a lower low. But as we see this new candle begin to trade, it certainly does look as though we're not going to get confirmation of that. We have seen the market close up above the 119.85 level of previous support and resistance, and what we want to see here now is some strong follow through to confirm that. And if we do see the market follow through, there is potential for strong resistance at the top of the Ichimoku cloud at 120.40. With the market trading within the cloud, we're seeing not a lot of direction in this market as well. We see the market testing just above the Kijun-sen and just above the Tenkan-sen, so slightly bullish in the fast-term time frame and only just slightly in the medium-term time frame, and a lack of clear direction in the US dollar Japanese yen at the moment. So we'll be waiting for a breakout and strong follow-through after a breakout either above the Ichimoku cloud or below. And looking at the bands here with the US dollar Japanese yen, and here once again we see that squeeze going on, and in all, it seems that not all, but in most of the major currency markets, we are seeing quite some inactivity and the squeeze going on, and it certainly does suggest that we're likely to see some strong trending action probably sooner rather than later. And as traders, we need to be aware of that, getting prepared to take those trending moves when they do develop. At the moment, the market's trading within the bands. The upper band is trading at 120.17. It has potential to act as resistance as it has in the immediate past, and the bottom of the bands trading at 119.18 may act as strong support, but what we're waiting for is a breakout in either direction, either above or below, and then the follow through if it does occur. One market that does seem to be rather interesting at the moment is the Canadian dollar. And here we've seen previously the market trading up above the Ichimoku cloud, extending sideways in a very large congestion area, very large rectangle type pattern, double top, almost triple top type pattern, breaking out down below the very strong support around the 124 level in a strong bearish manner, but finding support down around the bottom of the Ichimoku cloud. Now, a strong breakout down below the Ichimoku cloud is going to signify a very strong transition from that strong uptrending phase, the neutral area within the cloud, and then a potential strong downtrending phase. At the moment, with today's candle, we've seen the bearish breakout down below, the market closing down below the Ichimoku cloud, suggesting that there is perhaps a strong negative bias in the long-term time frame, but we haven't seen a lot of strength in terms of the sellers in this market. We do have a black body candle, so it suggests net momentum from the sellers, but we do see a largish shadow on the bottom, suggesting that sellers have lost commitment down roughly around the 122.40 level, or just below there. And with the the sellers losing control, it doesn't suggest that we may see continued development of the trend to the downside. So there is a possibility of that occurring. So the next candle is going to be very important, but what I'd like to see is development of some bearish activity down below the Ichimoku cloud to give us some faith in the transition into this long-term downtrend. In terms of the other trends, we're trading down below the Kijun-sen, the pink line, and the Tenkan-sen, the green line. It suggests that we have a bearish market in the medium and fast-term timeframes, and that activity is supported by the Chikou span being below the corresponding price action. So it's suggesting that the market is set up for this downtrend to develop in the long-term timeframe, and I suggest that we probably should set ourselves a benchmark of this swing low down at roughly about the 120.84, and if we can breach down through there, we could see Canadian dollar certainly moving to lower levels. Now, just looking at the Canadian dollar with the bands here, and here we saw the market squeezing up, very similar to what we've seen with the other currency markets, and then we were waiting for the breakouts and the activity confirming. So about a week and a half ago, we saw the strong bearish breakout after the squeeze, and importantly the market breaching that strong support around 124 in a bearish manner. We saw some strong follow through, and now, as is typical, we saw a retracement back towards the bands, and we've seen the bands start to hold as resistance. So what I'd like to see here now to further confirm this strong bearish bias in the medium term time frame would be more bearish activity to the downside, and certainly a breach down below this swing low.